So, hello, and a massive hello to everybody. Hope everybody's having a great day, great weekend. This is 50 Pips, rocking and rolling, 7th of August, 2016. No trade calls or recommendations, or response for their own stuff. And the fact that you're listening to this means you've read to understand. You accept all the disclaimers on the blog, understanding that this is just for educational purposes only. So, what's going on as we head on into another August week. So keep in mind that this week is fairly light on the data counter. Um, One interesting thing will be, we've got RBA speaking on Wednesday, and we have that RBNZ press conference with a rate decision too, which is going to be, key. That's really the main event risk in terms of the front end of the week. But one thing I'd like to draw your attention to is on Tuesday, we've got that manufacturing production out of the UK. So just keep in mind that after what we've seen out of Carney, the data is going to be very important to see data out of the UK, if it's good or bad, right? For the next steps, for the guidance to get a feel for what BOE may do next. And then, of course, we got those unemployment claims on Thursday, Friday. A bunch of GDP out of Europe, and all those retail sales PPIs out of the U.S. So again, some stuff with University of Michigan too, I think. So stuff stacked up towards the back end of the week. So what are we looking at going into this week? So the first thing I would really like to draw your attention to, and we discussed it into the close of July, is to keep an eye on the bonds, right, on the ZBs, ZNs, etc. We think that we have, we've been talking about this for a long time, but we think we may put in a very decent top, right? So we expect to see a lot more weakness, both in terms of actual, levels and velocity of move in the bonds to the downside. So that's something we're going to be extremely focused on. In terms of the equities, we've got the ES here. We talked about the fact that as long as it stayed bid, upside attracts. We always say be very, very cautious about fading these non-farm payrolls. If you actually want to fade them, you're better off fading them later on, 24 to 48 hours afterwards. So going into the week here, really, as long as the ES holds above these 2165s, right, you'd expect it to try and press higher. So this is a classical scenario where you'd hear us say, if we fail, we have to fail from a higher level. So we would expect the market to take out these highs, and then if it fails, fail closer, either on a takeout of the next level but anyways, higher than last week's highs. Then to the downside, as long as we stay above 2165 bid, below 2133 remains the big pivotal zone for either more upside or a bigger retracement back down into the 2100s. Now, something which I'd be particularly interested to keep an eye out for is on the NASDAQ, right? We broke up. It's going to be extremely key level. So we're trying to hold very bid. If you look on a daily, we tried to press above this level. And, we tried to press above those highs, then got sold off hard. And now, bam, here we go all the way back to the upside. So keep a very close eye on how we behave. As long as we hold above this, very bid. If we start to hold back below that breakup zone and we start to get some kind of velocity to the downside, would not be surprised to see a very decent retracement, catch a lot of people off guard. So these highs are going to be key, similar to the ES, right? What else are we looking at? So again, because we've got these, the RBNZ, we'll be looking at Kiwi and Aussie. Of course, don't forget gold, right? We talked about the fact that we don't understand why you'd want to get aggressively long at gold at highs. Now, this is almost too good to be true, right? Because we've had all these, we called it the BlackRock high when we had that news coming in that the ETFs, I don't know, couldn't buy, there wasn't enough gold to buy. You had, every time somebody came out saying gold is going to rip higher, then we got the puke, right? And what happened on last week, I think it's the same day where we had those articles, the press talking about Bill Gross saying you only have to buy gold, you only have to buy gold, bam, we puke lower. So, this stuff's too good to make up. But anyway, that doesn't mean we don't think gold is going higher in the long term, but we'd be very cautious about trying to chase headlines, because it's the best way to get in trouble. If anything, all these headlines, Bridgewater, Buffett, Soros, all this stuff, we're gun to the head, we'd always fade those headlines. But anyway, What's going on here? So 1350 remains pivotal. Clearly failure to hold above there. So as far as we're concerned, lower attracts, and we think the market will be looking at this support zone that desperately needs to hold right above these 1300. Now what's interesting with this area is that, you know, it's tried to hold this area, right, this breakup zone, strong resistance twice, strong support twice. So here the big question is, how strong is this area going to be if we make it all the way back down? So I'd be very, very cautious. I mean, clearly it's a strong support and you need to respect it, but I'd be very, very careful of this area. So as far as we're concerned, upside 1350, 1300 mid, 1250 low end of the range if it gets Momo to the downside. But again, we would not be surprised to see fairly choppy action here. Okay, now as we said, Aussie and Kiwi. So Aussie, we talked about all these levels being very, very key structural resistances, and we think that even though clearly there may be a lot of joe bonding from the central banks, a lot of wheeling and dealing, a lot of people caught off guard on the shorter term short plays, a lot of people looking for yield, we still expect these to resolve to the downside. Now, all things being equal, and again, caveat here, just be careful. In the past, when you get stuff like, you know, the print we had on Friday in terms of data, the markets tended to respond a lot nicer, right? You tend to get moves that really got legs. So these markets are slightly different. You know, we get a lot of choppy action. Stuff doesn't really get a lot of traction. They're much harder to trade. You know, there were the more golden years where you could trade the news and things would react exactly how you'd expect them to react, and those reactions would stay sustained. Here, the market is a little bit different. Now, all that, why am I saying all that? Well, we're saying that because all things being equal, after the prints we had on Friday, you would expect in a normal world in brackets, and we stress that we're not in a normal world in brackets, you would expect bonds to get sold off hard, and you'd expect USD to continue to catch a bid. You would expect, you know, stronger and stronger and stronger dollar across the board, right? For the whole week, whatever, until the next data points. So all that to say that we still believe we're in very strong structural resistance here. We would not be, we would not rule out spikes here, but as long as this broader zone holds, we still think the path of least resistance is a bigger correction down, okay? And that's very, very similar to Kiwi. Now, very, very big resistance zone. Now, keep in mind here, Kiwi, as much as everybody's saying that, you know, taking for granted that the RBNZ is going to cut, the big question is by how much, and how much, you know, what is the forward guidance going to be, and, you know, what are going to say, or what are they going to lead us to believe, or what are they going to talk about in terms of other cuts, right? So if it's just a little cut, you know, market might be disappointed. If it's aggressive cut, you know, you'd expect the market to try and take out this level quite aggressively. Now, if we get a strong cut and very, very strong indication that there are going to be more and more and more cuts down the line, then you would expect this area to get taken out pronto and this area to get clipped. So structurally, the risks are 1, on a decent cut, 2, on aggressive cut and aggressive forward guidance, right? And as long as these things materialize, we'd still expect this top to be in and to slowly be making our way back down to lower levels, right? If the RBNZ disappoints, watch out, because we could come up and take out this upside, and at that point, it's going to be all about follow through above these 73s bull bear line in terms of daily closes, weekly closes, okay? It could get choppy if they really disappoint. All things being equal, you know, anything can happen, but the way they've been talking, the way that you can't play for a disappointment, right? Short term, a lot of people can get off guard, but we don't think it would be wise to actually, you know, in terms of odds, to play for a disappointment. Now, quickly, Germany, we talked about this quickly last week. If memory serves, what we said is this is a broader resistance zone, but we would be very, very careful to get super aggressive into these lows, because you had to respect all this resistance, and we got a nice, beautiful little bounce off that resistance. So no change in DAX. We still think this is a massive chop zone. We don't think, at least where we did the last update, where we were trading about here in the middle of this range, we don't think this is cheap enough to buy. We don't think it's expensive enough to sell. Where we think the edge is last week buying there, or this week trying to sell up here if we get failures, right? So, but again, more focused on U.S. equities, just doing that because a lot of people asked about DAX. And what's happening on crude. Crude pretty pure, right? We were looking, we've been talking about this for a long time as far as we're concerned. Top, we're looking for a move back into 4240s, pivotal level, first area where we could get a little bounce. If not, we expected to move back into the 3880s. Now, we got that in extension, didn't quite clip that level. Doesn't matter because it blew through, knife through butter. As far as we're concerned, this is put in a short-term bottom. Right here, the level to watch is the key support resistance zone, right? Going into the week. So what we're focusing on, what happens in terms of a day close around this level. Day close above this level, then we could possibly see an even bigger correction, back into this level here. But if we can't close above there, then we would expect this to be the next leg lower in extensions, and we would expect the price to try and come all the way back down into the 35s, okay? What else have we got to look at? Yen and euro. So what's going on yen? So as we discussed on yen, even though this is an extremely bearish chart, we don't understand why anybody would want to get aggressively short into the 100s, into this level. So we said, if anything, we'd be buyers, right? And right now, as long as this area holds, and if the USD continues to catch a bid, we would expect this to slowly try and make its way back into the 103.50s. If we can hold above the 103.50s with some Momo and flows, then we would not be surprised to see us trying to take a step back into the 107.50. Keep in mind that the 105 is going to be a bull bear line. These are all strong support or resistance levels, but could easily get sold. But going into the week, 103.50 daily close below could come back down, but daily close above, we'd expect it to get more and more Momo to the upside. Remember what we said about USD flows in general after the Friday print. Euro, we talked about this last Sunday. If memory serves, we said we expected it to pop above the 1200. We expected it to try and clip some stops, but what we said is we would expect the sellers to materialize ahead or at the 100 DMA, at the 112.33s. Pretty pure. We got lucky. That happens every once in a while. Smack down back into the 200. Beautiful little short opportunities. As far as we're concerned, that's done and dusted. Reminder, as far as we're concerned, when we're trading inside the 100 and the 200 on the daily, it's a chop zone. That means that we're not necessarily looking for big moves. We're not necessarily getting excited about aggressive swings. We are just trying to be extremely tactical at the extremes. Now, it does look like we might try and clip these lows, but again, this is a very strong level which needs to be respected in terms of support. We would not be surprised to see a lot of chop here, but still we would not be surprised to see a lot more USD strength. All things being equal, we think there are far more interesting charts, far more interesting opportunities, but again, the chart's been respecting all the levels and the areas quite nicely, so we really can't complain. So guys, I hope that was useful. As usual, it sounds boring, but it's true. Thank you so much for all the guys who can be bothered to retweet, share the content. It's always very much appreciated to see people are enjoying the stuff and liking it. I wish you an awesome weekend, rest of the weekend, wherever you may be, whatever you may be doing. Hit me up on Twitter or hit me up on the blog if you're going to be around the next couple of weeks, or if anybody's going to be interested to do another live session, maybe next Sunday or the one afterwards. We'll try and do a Sunday session live. We'll do the usual weekly rundown, and then we could do an extra half an hour or something with an open Q&A where anything goes. You can ask me about anything from golf to weightlifting to scuba diving to guitars to drum kits, whatever you want. If you have any questions that are a bit more tricky or a bit longer and you don't want to bother to type them into the chat when we have the live session, we will have one in the next couple of weeks, so don't hesitate to hit me up on the blog and email them to me. Use the contact form on the blog to send them through, so that may be easier for you and it may be easier for me, so I can prepare for those questions. And as usual, don't, if you're in and out over the holidays, remember you can always subscribe to the blog. It's on the homepage, bottom left, if I remember. That just means that you get an email every time there's a new post, or so you can keep in touch or have a heads up for when we're doing those live sessions. Again, thank you so much, guys. Have an awesome one. Stay safe. Talk to you guys soon. Bye-bye.